Okay, let's move on and let's discuss Hindalco's quarter. Joining us right now, the MD Satish Pai. Mr. Pai, great to have you on the show. The global commodity rally has not left aluminum behind as prices of the metal have now crossed about $2,000 on the LME. Help us understand how this is going to impact life for you.
So if you look at our EBITDA for aluminium in Q4, 1,610 crores, this is an all-time high in the history of the company and a 27% EBITDA margin. So this is a result of two things. One was the LME, by the way, average of Q4 was about $2,000. But I think equally important, our cost of production of aluminium was quite controlled. It was only 1% higher than Q3. So that's why the drop through in the margin was quite strong. Of course, we also were hedged nearly 50%. So that's why our upside was not fully captured. So even then we made a 27% margin. Now going forward in Q1, our hedge percentage is much lower. It will drop to about 25-30%. So I think that we will be able to capture more of the upside. And as you said, the LME in the Q1 is already running at about 2,400 compared to 2,000 in Q1. The cost of production will go up, but not as much as the LME has gone up. So the margins will be much better in Q1.
Sure. Also, Mr. Pai, LME Copper has now crossed $1,000. But how are the TC as well as RCs? And why have copper business margins dipped so much despite the revenues close to doubling?
Well, problem meaning TCRCs are at all-time lows. So generally what happens when copper prices go up, TCRCs tend to go down. Because what has happened is that there is a big shortage of copper concentrate on the market. So custom smelters like us get given a refining and conversion charge. And when the supply of concentrate is very tight, the amount that they pay you to convert it to copper goes down. So TCRCs are quite low. So really Hindalco does not benefit from high copper prices. We only benefit when TCRCs are high, unlike in aluminium.
Okay, your copper business has seen a pickup in volumes, but we're also seeing a major shortage when it comes to copper in India. When do you see your new facilities come through in order to fill that void?
So we still have a smelter 3 shutdown planned in Q1. But let me tell you that our customers will have no impact, because what we have done in preparation for the shutdown, and even last year when we had the smelter 1 shutdown, we have imported copper cathodes, so that our customers should not have any problem with the copper that they need. So I think in Q1, our results will be impacted because smelter 3 will be shut down most of April and May. But once that is over, from the Q2 onwards, copper should have a pretty steady performance going forward.
Okay, on raw materials, while LME has risen, scrap prices, other raw material costs have also seen an up move. So how much of a threat is that now to margins going forward? And what sort of savings has Utkal delivered for you in the middle of this environment?
So input costs, let's talk about it, because there is certainly a cost inflation starting to play out now. So for us, CP coke and pitch prices have quarter on quarter risen about 18%. Coal prices have started to go up again as we have to buy on the e-auction market. So overall, as we said, we are expecting Q1 cost of production of aluminium to be 4% higher than Q4. So that is the level of cost increase that we are seeing.
Sure. Let's talk about Novelis then, where with every passing quarter, the profits for you are only increasing. Do you expect the strength in the auto and beverage businesses can continue to perform?
Absolutely. I think that if you look at the 4 end sectors for Novelis, can is extremely strong because people are preferring can to PET bottles, etc., because of the sustainability angle. So can market is very strong. Auto is quite strong because of electrification and lightweighting trends that continue. The specialty markets, which are building and construction, truck and trailer have been doing very strong for Novelis. And the fourth sector is aerospace. That's the only sector that's weak for Novelis because air travel has not picked back up and it'll probably take a couple of years for it to pick up. So for Novelis, out of four, three sectors are very strong.
Sure. But Mr. Pai, is Novelis' capex in China on track? And it's a project which is very closely watched by analysts as well because of its potential to expand margins going forward. Any challenges or delays that you anticipate, especially on the geopolitical front or because of China's new decarbonization stance?
Absolutely not. I think for us, we are going to add a coal mill in Xinjiang, which is nothing to do with the carbon footprint, etc. So we plan in the next couple of months we'll be breaking ground there. So Novelis has a 600 to 700 million capex plan for this year, and one large part of that is the China project because it's a part of the synergies with Aleris as well that we had announced. So we will be certainly trying to do that project as fast as possible.
Mr. Pai, morning. Now, Aleris so far in FY21 has been giving synergies of more than $150 million and delivering an EBITDA of about $200 million. How do you see this business ramping up in FY22 and beyond that? Because it has a big exposure to high margins, but of course, on account of COVID, will have taken some sort of a hit.
No, but I think generally for Aleris, the aerospace is slowly starting to come back. So we are quite confident. We had said that Aleris will be around 350 million tons EBITDA. That is the Aleris business that we had retained. And we are quite confident of getting there. I think you will see in FY22, the businesses will be contributing a lot more than 200 million that they did last year. So yes, aerospace will take some time, but the other parts of Aleris are doing quite well.
Now, a lot of your new projects in India are focused on value-added profit, value-added products and margin accretion. And you're also looking at catering to sectors which have a relatively low aluminium usage in India, such as packaging or even in construction. So how do you see your overall volume picture increasing as your capex progresses and, through this payback period?
I mean, the most of these projects have an IRR of around 15%, so they're like 6 years of payback. But as soon as we can get capacity, the demand is there in the Indian market because the Indian economy is growing. Now, if you take this whole COVID year that we have gone through, semi-rigid containers for food delivery, the demand has gone up by 100%. So food and packaging, pharmaceuticals, all these are very aluminium intensive. And hence the demand has been extremely strong. And the more traditional sectors like transportation, auto, building and construction are slowly coming back now. So fundamentally, I think the aluminium demand in the downstream in India is quite strong. It's up to us to ramp up the capacity as quick as possible. Because today we are at about 300 KT. Next year, we have targeted 330. Then we have downstream projects like Silvassa extrusion coming on. So we intend to double from 300 to 600 KT in the next 3 to 5 years.
Okay, now you've managed to bring down consolidated net debt to EBITDA to about 2.59 times with your new capital allocation policy, which devotes about 30% FCF to deleveraging. When do you target to reach the pre-Aleris acquisition debt levels?
So we would like it to be in the low twos. We have consistently said that. So at 2.59, we are at the pre-Aleris levels of net debt to EBITDA. This year, Novelis will pay down another 600, 700 million of debt. And we plan that by the end of this financial year, we should be in the low twos for the net debt to EBITDA.